Hey everyone, and welcome back to what I believe is month 9 of the road to 100k funded with the Fiverr series. And boy, I'm sure none of us were expecting the road to be this long. I think we were all thinking that at least be a challenge fail by now. But this is the nature of my trading strategy, as I've said before. It works particularly well with personal accounts because it's just slow and consistent. There's absolutely no chance that I'm ever going to blow an account or fail a challenge with this approach. And you can see that we're just trickling down as we're waiting for that next big winning trade. And I was recently on the Fiverr's live stream and I was speaking with Will, and he was telling me all about a guy he'd interviewed on the Fiverr's channel. And interestingly enough, he had a similar strategy to me, but in a way far more intense. It's like my strategy times three. And this guy's strategy, he had, I think Will said that he had like a 5% win rate, and his average risk to reward was 1 to 30. So when he wins, he makes 30% profit. Every other trade loses -1% and 5% win rate. And you can see that type of trading strategy, which is a bit like what I'm doing, it's not easy psychologically, but it's arguably one of the most profitable trading strategies if you're able to follow through and execute it consistently. The edge is strong. It's just a matter of whether the trader is strong enough to execute it. And I think that's the position we're in because the win rate is low, and the winning trades have been very few. They're not coming very often. But this month, I've taken 3 trades, and there was one missed trade as well, which I'll talk about. Just before we look at the charts, let me say, if you're looking to start a prop firm challenge, I highly recommend the 5%ers. I've been trading with them for 9 months at least, right? But before then, I've been trading with them for 3 years in total. I've had nearly $10,000 in payouts with them, and I recommend them to anybody that's wanting to take a prop firm challenge. So if you're looking to start a prop firm challenge, Fiverr's link below. All right, let's have a look at the charts. So the first trade we took this month, November, on our 5% challenge was this flag on AJ. And at the exact same time that this flag set up, there was another flag on AU. So I took 2 flags at the same time here. So there is some currency correlation involved. So looking at this, let's analyze what is high probability about this trade. Looking left, you can see that we've been in this larger uptrend. And we tried to have this reversal, but it failed. You can see that we broke below this low and this low with this V shape, and we started to maybe start getting a move back to the upside. This is what I was anticipating. That is the prior price action, the higher time frame top-down analysis, I suppose. But looking just at recent price action, it's very clean. We've got a head and shoulders formation or a V and a range, and we've got a super clean impulse to continue. Now, the flag itself, was there anything that could be better here? I mean, maybe this retrace candle could have been a little smaller because it kind of feels like an engulfing. It's not, I don't think it's technically an engulfing because it didn't break the low of the previous candle, but it is engulfing the previous candle's body. What I really liked about this trade in particular was the entry candle, the way that we broke this flag low and we retraced with quite a lot of momentum. That tells me that on the lower time frame, we really got quite a strong rejection. Obviously not as strong as I've drawn here, but it shows momentum is back to the upside after we took out those stops. So I set my order. Well, in this case, I entered with a market execution, and I'm pretty sure this was a 15 pip. I'm pretty sure I used a 15 pip stop loss here. And unfortunately, next candle, tagged out. That's just the way it goes sometimes. I believe it was a trade that reversed in the end, so my stop loss did save me, and I did the right thing by having a stop loss, as you should. But yeah, that was the first trade of the month, and it was a 1% loss. But as I mentioned, there was another AU flag, which I took at the exact same time as this AJ flag, so we'll have a look at that now. The next trade I took was this flag on AU. As I mentioned, it formed at the exact same time as the flag on AJ. And this entry wasn't as high probability as the one on AJ. The impulse is not nearly as large. You can see that it's mostly within the high and low, and the V in the range is not quite as clearly defined. It wasn't super clearly defined in the AJ trade either, but in AU it's particularly unclear. Now, you're probably thinking then, why did you take this trade if it's not as good as the one on AJ? Well, it was still worth it in my opinion, because in prior price action we have this large descending channel, and the V is particularly clear, the range not so clear, and the impulse, as I mentioned, is rather small. But I am seeing momentum here. Undoubtedly there is momentum, and these candles show me no shift in that momentum. So following that entry candle, I was quite confident that this was going to well, not continue moving up, but start moving up, because this is essentially a reversal entry. If I were to go in the 4-hour time frame, okay, it's not as clear as I'd hoped, but this is basically big descending channel, and then we're starting to see a reversal here. That's kind of what I was imagining in my mind. And we've got two elements for this reversal. We've got the channel and the V and the range. And yeah, so the impulse doesn't need to be quite as big, because I'm not looking for a continuation, I'm looking for a reversal. In this case, again, I really liked the way that we got the flag entry, lots of small candles, no shift at all, and the entry candle was really nice. If I put my entry down here, you can see that we got no shift in these candles, and then the entry candle itself showed quite a lot of momentum. Now, actually, I'm mistaken. The entry was not here. I actually entered on the open of the 11 p.m. candle, which was actually down here. So I got in a significantly better price than this entry candle right here. In fact, there's probably, I think I got in a couple pips higher, so I'll do this to account for spread. But yeah, I actually got in quite a good price. I think there was a data change though, because the open and close on this trading view candle are exactly the same. I checked my IC markets though, and on my MetaTrader data, the open and close are slightly different, and this is a bullish candle. So I entered quite a bit lower. Had I entered on the close of this candle, I would have been tagged out of this position. But fortunately, I got in at a slightly better price. So we're trickling up. You can see I've finally had an opportunity to lock in some, well, to reduce my risk. So it was around here that I managed to reduce my risk. And then I was able to do so again right before I was tagged out at this news candle. So the result of this trade, I believe, was negative 0.3%. So we've taken 2 trades so far, and we're negative 1.32%. So the next trade we're going to look at now is one that I missed, and then we have my last trade of the month, which we'll look at before doing our dashboard analysis. So here is a trade that I would have taken. I was at the charts when this candle formed, and I was on the Zentum call actually, and I was saying, if the next candle breaks the low with momentum, I'm setting my order. But the next hour, I completely missed the charts, and I didn't have an opportunity to set my order. And you can see you would have been tagged in right here. So 1 pip below, you'd have your order like this, 12 pip stop loss. You'd have been tagged in here, and you can see you would have been tagged out on the next candle. So I was fortunate, I suppose, because I missed a 1% loss here, but I would rather be in a 1% loss than have a missed trade. I think it's really important to emphasize process over outcome. It doesn't matter if the trade wins or loses. What's most important is that you execute your plan as accurately as possible. And in this case, I didn't execute my plan at all because I missed the trade. So unfortunately, I missed this trade. I missed the negative 1%, but it happens. Unfortunately, you can't take every opportunity. And what makes this trade so good is the classic EU, well, Euro high probability price action, where you have a channel and an impulse in the opposite direction. So you don't break out like this, you break out to the downside. And what's really high probability is that you have something like this, and you have a continuation or a flag, and then you can continue to the downside. And you can see that's exactly what we had here. We had the descending, we had a really nice impulse, beautiful retrace candle actually, and then the break was great as well. So that's the third trade we've spoken about, but it's not the third trade that I took this month, which we're going to have a look at now. So the last trade I took this month was this continuation on AJ. And again, I think there's been a data change because this isn't an inside bar anymore. Can't be too fussy about these things when I have such low trade frequency already. So I had my order right here, 1 pip above. So that is there. And I think I used a 15 pip. It might have been a 12 pip. I think I used a 15. I'll put 15. So what makes this trade high probability? Looking left, we are in a bit of a range. You know, you don't really want to be taking continuations within a range, but I was very confident that we would be moving towards, let's see if I can do this, moving towards these highs over here. Because looking at the lows, we had a quite clear liquidity sweep. We had this push up, so there's momentum. So we know we've got stops and we've got orders underneath this low. We've got the range, and then we came and tapped that and rejected. It's super clear when you have that wick. And you can see from this point, this was the beginning. We had a very clear shift in momentum. So you can see we've just been moving sideways, and then suddenly we reach this point and we start trending to the upside. We're starting to see quite clear momentum. Now looking closer, let's get more granular. You can see quite clear momentum in these candles. There is no shift in this whole move up, not a single shift. The only sign that momentum may not be bullish is these wicks. These do show signs of a slowdown, but that doesn't mean a slowdown has to happen, because you can see here we got this wick suggesting a slowdown, but we continued. Again here, we got some wicks suggesting a slowdown, a bit of a pause, but we continued again. And now at this point, we've this right here, if I highlight this, it's not super clear. The momentum isn't really there, but if we look at the single candle pullback and this candle right here, I'm seeing momentum return to the market, and I am expecting this pair to continue trending correctively to the upside. So based on all this, the liquidity sweep, the larger trend, the opportunity to target these highs, and this really nice single candle pullback and continuation candle, I was willing to set my order here 1 pip above, and I was not tagged in. So I left my order on, and then I was not tagged in. So again, we're seeing that price is moving up with momentum and then pulling back really slow, which is really what you want to see. And I think I was finally tagged in on the, now it's spread hours, so it wasn't until the next candle that I was tagged in. So right here, this large candle here, I entered at market open, the open of the 11 a.m. candle, so right here. You can see for a while it was a bit nerve-wracking because price started moving up so much, we nearly broke the high, so I wouldn't have been able to enter this trade if we broke the high. So price was up here and I was like, please come back and tag my pending order, and it did. And let's see what happened. We just carried on moving down. So I got tagged that for a 1% loss here, and you can see that it was the right thing ultimately, because although we continued trickling up a little bit, I would have been tagged out over here anyway. So best case scenario, I would have made like 0.5% profit or something. So that was the third trade I took this month, and this month I am negative 2.32%, I believe, which I'm very happy with. It's great to even have these trade opportunities, and each potential trade gives me the potential to have a 5% winner, a 10% winner, maybe even a 20% winner, and one of those trades will consume all of my losses for the last 6 months. So that is the nature of the strategy. That's what I'm executing on. And yeah, we'll take a look at the 5% dashboard now. Damn, the 5ers dashboard has had a big upgrade since last month. This is looking pretty cool. So, well, let's have a tour of this. So you can see that my current balance is $3,000 of profit. So I'm still up 3% on the account, which is very good. It's great to even be up at all. It is a nuisance because we came so close to passing it up here, and since is that May? Yeah, so the last few months we've just been trickling down. But another trade like this is all we're waiting for. That is just the nature of the strategy. So we've still got plenty of room on our max loss over here, plenty of room on our max daily loss as well. It's saying that my balance is 3,500, but the equity suggests, and the closed balance suggests, that it's only 2,992. So I don't know if the balance is 3,500 in profit or 3,000 in profit. You can see that I've got 1 of 3 profitable trading days. So although I need to have that big winning trade, I will need another 1 or 2% winner afterwards as well. I really like this, what they've done at the top, showing all the different scale ups, although it's quite challenging. The furthest I've gotten is 150k, I believe, and that's where my bootcamp account is. So yeah, we're still in the first phase. Let's see what else is going on down here. That's cool. What's this? It looks like they're making a profit calendar. That's exciting. My weekly profit, negative 0.5%. Well, that's the AJ flag I took. I am obviously doing reduced risk on these trades. My profit target is showing that I'm 44% of the way there, but I don't think that's correct. Oh no, the profit target's 108k. Yeah, that does make sense then. Looking at the net profit, I'm up 3,500. The profit factor is 1.4, so as long as it's above 1, I'm still a profitable trader. So I'm still quite a bit above 1. So very much, that's very good. Yeah, this is all looking good. My average trade duration, 4 hours. My win rate is 29%, but unfortunately this does consider the micro lot trades I take. So I think my win rate is actually worse than this. But win rate is super unimportant. It's all about profit. That's all that matters. Win rate is just the difficulty level you're willing to choose. There we go. I'll see you guys in 2 weeks. I'll be drafting up another video for that time. And thank you so much for watching to the end of the video. Make sure to subscribe if you haven't already. Watch my other videos. And I'll see you in 2 weeks. Thank you, everyone.